Getting stuck in a range-bound market is every trend trader's nightmare. It's like pulling the same dusty slot machine for hours, mind-numbingly boring and a steady money drain. There are plenty of tools out there to help avoid those dreaded choppy ranges, but today, I'm going to show you my personal favorite. And as a bonus, we'll combine it with that famous AI indicator from one of my recent videos to have a complete strategy. As always, I'll provide you with the best settings I've found after thoroughly testing them, so you don't have to waste your time. You might have already seen our range filter indicator in one of my previous videos. If not, I'll link it down in the description below, so you can catch up later. This indicator is called the Triangular Stoch RSI bands. Now, according to its creator, it calculates triangularity over the stochastic RSI's overbought and oversold conditions. But we're going to look at it from a slightly different angle. People often misunderstand the terms overbought and oversold, thinking that if the price is oversold, for example, you should buy, and vice versa. However, another way to look at it is through the lens of momentum strength. If the price hits and stays at those so-called oversold or overbought levels for a while, it could signal that the momentum is strong and likely to continue for some time before potentially reversing. The Triangular Stoch RSI bands provides an excellent visual representation of this momentum, plotted on the chart as moving average levels based on the current momentum and volatility. In the absence of a detailed explanation from the author on how you can actually use this indicator, let me give you my interpretation and share my view on how it can potentially be used to make profits in your trading strategy. You know, I always break things down for you in a practical way. When the price is contained within that yellow area, between the first upper and lower bands, marked in green and red, it's considered to be in a range-bound state. This yellow zone essentially represents a no-trade area where the momentum is lacking and the market is choppy and directionless. An important signal to watch for is when this yellow range starts narrowing. When it contracts, it could be a warning that the price is about to break out of this range, with volatility potentially increasing soon after. This is where we can look to enter in the direction of that momentum only after prices decisively break out from this range. For example, if prices strongly break above the upper green band and remain there, we could consider going long, riding that uptrend until momentum shows signs of waning. Conversely, for downtrends, we'd watch for a clear break below the lower red band as our potential entry signal to get short. However, we can't just blindly buy or sell based on these signals alone. As disciplined traders, we'll want to combine this momentum filter with other technical tools like support and resistance levels, price patterns, and our favorite trading indicators. Stick around, because I'm not only going to give you my best settings for this Triangular Stoch RSI band strategy, but I'll also explain how you can tweak and adjust those settings to get the most out of it for your specific trading strategy and market conditions. Before we get to the settings though, let's review another indicator we'll be combining with this momentum filter for our strategy today. If you've been watching my video about the differences between AI and classic indicators, you'd know that one of the indicators I reviewed was the machine learning Lorentzian classification. I'll link that video down below in case you need to refresh your memory on it. Let's add it to our chart. It doesn't look as promising yet. Much better now, isn't it? As I mentioned, you'll only want to enter after a breakout when price breaks out from the range area on the Triangular Stoch bands. But I haven't told you exactly how you'd enter yet. Here's the deal. This is a break and retest type of strategy. After that range breakout, we're looking for a pullback combined with a signal given by the Lorentzian classification indicator, obviously the one that aligns with the direction of the new trend. As long as price remains above or below those green-red stock RSI lines, depending on trend direction, that's our confirmation to pull the trigger. Now let me explain these gray and blue stock RSI bands to you. These can be used as potential profit target levels, allowing you to take some profits as price reaches certain levels set by the bands. When the price crosses that last top or bottom blue-gray line, it's considered heavily overbought or oversold, and a reversal is likely to occur sooner rather than later. So these outer bands can signal an area to either book full profits or trail your stops. As you can see, these outer bands are based on Fibonacci levels and can be adjusted. However, I recommend using these exact settings if you're trading on any time frame below 1 hour. If you want to use higher time frames, such as the 4 hour, you can try using these alternate settings. No matter what settings you use, I always recommend experimenting and backtesting before risking any of your hard-earned money. What looks good on one instrument might not translate perfectly to the market or time frame you're trading, so do your due diligence in ensuring the settings are properly calibrated for your specific trading conditions and strategy. Finally, for trading this break and retest setup using the triangular stock RSI bands, I recommend setting the dynamic length to 200. This higher setting will help filter out a lot of noise and allow you to identify much stronger, more impactful breakouts to trade. Speaking of which, to get these more reliable Lorentzian entry signals, I've tweaked quite a few settings as you can see on the chart. Rather than going through each one, let me just share the exact settings I use so you can simply copy them. Feel free to tweak them further for your own trading conditions, but these should serve as an excellent starting point. However, if you're more of a scalper looking to capitalize on quicker intraday moves, you can use lower dynamic length numbers, like 50 or even 20. These shorter settings will create more frequent signal opportunities, but also increase the risk and potential for false breaks. In this case, I recommend using default Lorentzian classification indicator parameters. So for the scalpers out there, the lower settings of 20 or 50 could work, but just know you're taking on more danger in exchange for those added opportunities. As long as you understand the increased risk and know how to manage it properly, the choice is yours. Alright, that covers the setup for this triangular stock RSI bands and Lorentzian classification strategy. Drop a comment below if you have any other questions. I'm happy to go into more detail on any part of the process. And while you're at it, don't forget to smash that like button. I put a ton of work into making these strategy videos as detailed and valuable as possible. A simple like not only helps fight back against the algorithm's demotivating ways, but it also allows me to keep pumping out this kind of actionable trading content for you all. So go put this strategy to work. Just don't blame me when your trading account is overflowing with gains.